Trump probably expected China not to wait. The US started to contact the Chinese. It wasn't the Chinese coming crying, right? It was actually the other way around. The whole trading regime has changed a little bit also given the nature of Trump. Trump is so unpredictable, not just on trade, just on about everything, that our investment in the US is too big. We have to start shifting investment. The problem is you can't have it both ways. You can't want volatility, then you get it, then complain about it. So another 3.5 years of Trump, yeah, I'm fine with it. So we're talking about the weaponization of the dollar, the weaponization of trade, weaponization of US assets for some parts of the world. There was a clear picture very early on in 2025 that short dollar is the trade to be. The dollar has to reprice. Then we also had a sort of fundamental side in a sense of...
Hey guys, if you find these episodes useful, make sure you check out my free newsletter where I dive into topics from the podcast and deliver actionable insights into your inbox every week. You can find the link in the description below, and thank you again for listening. Okay, Beat Nussbaumer, plus 40-year FX trader and FX macro expert. Very welcome back to the show.
Hi, Colm. Yeah, thanks for having me again. It's been a while since we last chatted, and I think quite a few things happen out there to chat about, I guess.
You were the first guest I had on this podcast, if you remember, right?
Yeah,
And,
of course I do.
yeah, and and we're near 2,000 subscribers now. So
Very,
things
very
have
well.
come a long way, and
Very nice.
almost 30 episodes.
Perfect.
Yeah, so it's
It's a
I mean,
comeback
as well
then.
as being my ex. Say again?
It's a comeback for me. Coming back to
Yeah.
now that it's all steaming and rolling.
Hopefully, more people for you to talk to now. Yeah, but yeah, I mean, today we're going to get into that big topic of trading this kind of Trump regime or the next year of volatility we have, or maybe 4 years. But before I want to get into it, how has your trading been so far this year?
To be honest, the trading generally has been fine. Early part of the year was quite good because we kind of got the exciting time of Liberation Day in April. So as a sort of experienced trader, you kind of know, which you probably may remember, the good old risk on, risk off correlations.
Oh yeah.
So April has been pretty predictable, pretty easy, even though I want to use the word easy in a very careful way. But as a professional that has gone through such events time and time again, April was predictable and therefore a lot easier to trade. So that sort of kicked off the year quite nicely with the Trump volatility, Liberation Day, tariffs, blah 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 blah. And so I would say the more difficult part has been the last, few months, or when Trump started to blink on different issues and things started to calm down. A market that kind of not quite sure where we're going, and a lot of the stuff can be having long-term implication, which right now no one sees in the market, and we can't be quite sure yet. So the whole trading regime has changed a little bit, also given the nature of Trump, which is he's talking every day, right? So he's out there every bloody day to say something. And you just never know, what he's going to say. Well, we kind of usually do. But the problem is that some stuff he says, which is either bad or good, on some days it gets taken up by the market and on some days it does not, right? And so the difficulty is to kind of, it's going into mind games and like ignoring him, and we are used to him. I think we briefly chatted about it before the recording started, that we had Trump 1.0, so it's not that we didn't know what we get. Now Trump 2.0, I would say the difference is in Trump 1.0, the world did fight him, right? Internally in the US as well as globally. Trump 2.0, with the kind of mandate he achieved in the election, with the kind of sweep of Congress and the Senate, and nobody inside the Republican Party is anywhere near of what Trump is or stands for. Now everyone wants to be his mate. well, in a loose sort of sense. We've seen that
Yeah.
with Silicon Valley. We've seen that, suddenly the people that did fight against him in Trump 1.0 are now either on his payroll or on his friends list, or want to talk to him or want to be in the good book with him, right? So that has obviously created also this massive attack on the external side with the tariffs, with the trade war, with him thinking the US has been mistreated in the last few decades, even though it's really their own fault of having exported their economy to China and so on and so forth. And we may come to that or not, it's not so important. But reality is, he is the president of the strongest, of the largest country in the world, of the strongest economy of the world, of the largest economy of the world. So you can be a bully, right? And so you just say, this is what we do, and this is what I'm going to do, and this is, you either agree or disagree, and if you disagree, you're on the wrong end with me, and so on and so forth. So this is what the market had to first get used to with Trump. And coming back to how my trading goes, is my trading changed as of May, going June, where the time horizon has collapsed. Meaning what? While before you had you broader views, you medium term views, you kind of where you think things are going, blah, 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 to a period where you just had to be fast on your feet because nobody quite knew, is the Chinese tariff going to stay where they are they coming down? You expect it to come down, but when do they come down? Do they come down at all? So this whole flip-flop ping pong that Trump was playing with his sort of posturing. So it's very hard to read posturing, right? Is he posturing or not? Is he serious this time or is he not? And so the implication of that is quite clear, that you can have a view about it, right? Which is fair enough. That's what we try to do. That we try to read the situation and think and try to think what he thinks, right? Which is maybe a very delicate
Good luck with that.
issue,
Yeah,
right? And
yeah.
but on the other side of that is our risk management. On the other side is our risk, which we have to manage, no matter if we believe what he's doing, what he's saying, if we don't believe what he's saying, and so on and so forth. So that's why at some point when we really had almost daily flip-flops, and then tariffs or no tariffs, and or delay or not a delay, this had really big implication. If you look at the market, we had a big sell-off in equities and risk in FX in April with Liberation Day. And then the first kick of the can was probably when Trump blinked with China, because funny enough, China was the only country that just go like, okay, let him just throw the toys out of the pram. We just do nothing. We wait, right? And they waited, and they waited. And Trump probably expected China not to wait, right? But they did. So actually, the truth of the story probably is that actually Trump blinked. These meetings we have seen, which is just one ongoing now again in Stockholm, is really the US started to contact the Chinese, right? So it wasn't the Chinese coming crying, right? It was actually the other way around, because I think there Trump just sort of miscalculated the Chinese, right? And so that was obviously the first blink, which had a big impact on the market in terms of turn of risk when when they agreed on this 90-day truce. It had a bounce in equities. Markets start to think like, okay, Trump blinked, so that means he's not that serious, and it's not going to be the end of the world, and blah 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 blah. And so from then on, it was this kind of, that's why Trump got his name from taco. Trump always chickens out, right? So we came into this taco period, and the taco period, and this is what I meant with the sort of horizon of risk having collapsed. The taco period, which we may still be in there, maybe not anymore, was that you had to judge whether he means it or not. Is he going to blink or not? Of course, the more often he did blink, it's like the auto tariff. Suddenly you realize, oh crap, he has like all these big tariffs. So because the US car manufacturer, all the parts and the stuff that get built is cross-bordering about 7 times before it's finished product in the US. So between Mexico, Canada, and the US. So if you add all the tariffs, you suddenly come up with that doesn't quite work. So he had to kind of blink on that. I think he had to blink on semiconductors. So all these sort of knee jerks were very badly planned, whether from Lutnick, whether from Navarro, from all these people around Trump. And so there was never really a firm plan. So that's why we had this back and forth and blink and no blink and do we take it serious, not serious? And suddenly you had to adjust as a trader a lot faster to changing environment. And to be honest,
Yep.
even though I have long hours, just because I like it, you can't cover 24 hours, meaning you sort of, Trump can start speaking again at 10, 11 o'clock at night for us in the UK and markets start to move. And that has become a challenge because you just can't know, right? You can't predict someone that it can be unpredictable. Some may argue he is predictable. Yes, in some ways he is. He's a deal maker, blah, blah, blah. At the end, he wants to make a deal or be seen to make a good deal, which is probably what we see now. We hear of a lot of trade deals, but if you look at it, there's nothing on paper, there's nothing signed. It's, great trade deal with Japan and the largest trade deal ever with Europe, but a lot of the stuff that is in there is either not even manageable, so that Europe will never manage to buy that many billions of US oil in the next 3 years. So there's somebody wrote something this week about how to treat Trump, and I think this is what people start to play it. That you just let him dictate the headlines, right?
I saw this.
Right?
Yeah.
And it's a brilliant. To be honest, this is brilliant.
Yeah.
It's really about let him vent, give him the headlines. Oh, 550 billion investment. He's gonna go away. He's gonna talk about it. He's like the hero. But at the end, maybe nothing happens, right? Which there's two ways to look at it. One is in the short term, it's not a problem. It's great because it seems like we get a bit of stability in global trade. So we don't get the bad side of global trade. We still have the highest tariffs since 1930s, so we shouldn't forget a possible negative impact of these tariffs down the road. But in the short term, Trump is the winner. The headlines are all his, no doubt about it. Europe, a lot of people wrote about how Europe surrendered. I'm not sure. They just went like, okay. Not that I'm a fan of von der Leyen, by no means, but I think at some point they just said, you know what, let's just give him the headlines. We see where it ends, because the flip side of it is to take him on, then have another 3 or 6 months of higher tariffs. So like people, and this is what I kind of dislike in the media right now, because media is so fast and everyone is out for clickbites, even people like Reuters, Bloomberg, and so on and so forth, where you just get thrown on the bus, even though people not really looking into the subject. So what's the alternative? Yeah, Europe could go like, yeah, we're a large trade bloc, so we're gonna fight you. Okay, who's gonna lose? Everyone, right? And so you have like 25% tariffs or 30% tariffs for another 6 months, and then someone is gonna blink, and then you're down at 15% in 6 months' time, maybe. But the damage in the 6 months is just too big, right? So I think the idea was, let's agree, because first of all, it's not going to get signed. It's kind of, yeah, we do this that way, blah, blah, blah. And maybe in the next few months, there'll be some discussions around some products and there's a lot of fine tuning going to happen in the aftermath, because reality is a real trade deal takes years. It's not like 10 hours sitting down and have a chat. That's not going to happen, right? So I think, coming back to the topic on trading, I think we just had to become a little bit more shorter term oriented, maybe adjust to these deadlines, right? Deadline 1st of August of the trade deal. We seem to have gotten a Japan one, European Union one. The talks in Stockholm with China seems to go also that they probably extend the truce for another 90 days. So there's not going to be much issues from that side. Then the rest of the countries, some get 15, some 20, some 25%, but they are less maybe critical to global growth. to the risk on,
Yeah.
risk off story. So I think we're pretty much probably there where we can switch back to a little bit more macro data and just treat Trump as noise. So I hope that we now, well, we're in the middle of summer holidays, so it's maybe not the best period, but let's say going through the summer, coming out of summer, I would think that we can start to focus on the real economy again and on the hard data, and that may start to increase duration again of some of the views, some of the positions, as maybe the biggest noise from the White House is maybe over, maybe not. So as a trader, you just have to adjust. Like I said in the beginning, no matter what your view is about the subject, we try to have the view, we trade what our view, our interpretation is, we manage risk in case our interpretation is wrong, and then have a go at it again, right? So that's just the life as a trader. So in that sense, my year is like any other year, which is just the good thing of it is the Trump volatility is nice on some hand, right? Definitely, like I said, in the early part of the year. Then at times the Trump volatility goes on my nerves because you just can hardly rest because it's just an ongoing story with him, and so that's really, you know, you can't. The problem is you can't have it both ways. You can't want volatility, then you get it, then complain
Yeah.
about it. So I go with volatility. So another 3.5 years of Trump. Yeah, I'm fine with that.
It's a double-edged sword, I think, volatility. Everyone wants it, and everyone's on LinkedIn saying volatility is opportunity. But at the same time, they can also get blown up just as quickly, right? So, I
Absolutely.
mean, for you, it's like if we split the year into pre-liberation day into kind of taco period, right?
Yeah.
You would what kind of theme were you trading when it was, you know, uh, Jan to Liberation Day? Were you bullish on the USD, or how
Mm,
did you, I guess, position for that?
To be honest, I mean, very early on, I sort of taken the view that the what Trump is doing. This is now a little bit critical in a sense what I'm saying maybe, but there are two aspects of Trump, and that one aspect, as we knew, is the trade war and unfair treatment and blah blah blah, all the tariff stuff. The other one is what he's doing in the US about the power he currently has to just change about everything he wants to change, right? Now, change is always a difficult word for people. Change is always a very difficult word for businesses, right? Now, change is okay if you know what is coming, what you have to do, blah 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 blah. Then you change, right? And then you have a new paradigm. Now, with the Trump administration, what you start to get is a lot of sort of, again, very Nietzsche kind of stuff, and goalposts just constantly shifting left, right, and center. So very early on, I got the feeling that the US will have a problem, right? The dollar will have a problem. US assets will have a problem. How? I think there's one thing where people just go, it's not about anti-America or worried that they're going to go total lunatic, but if you have the US has been the biggest growth market, the dollar has been doing very well in the run up to end of 2024, early 2025. So all on the back of this US exceptionalism story. And suddenly you are confronted with you looking at your books and go like, okay, what is my investment in the US? Am I too invested in the US right now versus the risk what Trump is creating? Right? Let's also not forget the fiscal issue, right? The beautiful bill, which is coming out, which experts will still be divided. But net, I think we would agree that the deficit will increase another $4 or $5 trillion. Now, yes, you have a very large economy that is growing rapidly, but you also have a ballooning fiscal problem at the same time. So what actually is the first thing that started to build up is a topic I think we covered at the time, probably when you done your course with me, is the topic Sell America. Sell America has not happened for decades. I would have to really think very hard. Well, I'm old, so I have to go very far back. Did I ever experience sell America? I might have, but not like sort of knowingly, right? So that means we really started to build up to sell America. For those that don't know the term, sell America is you sell stocks, you sell bonds, US bonds, and you sell the dollar. This is what started to happen. This was what going into Liberation Day and whatever, where people just go like, you know what? Trump is so unpredictable, not just on trade, just on about everything, that our investment in the US is too big. We have to start like shifting investment. Then there is part two, which is it's about, you know, countries, whether it's China, whether it's other, you know, areas of the world which are invested in the US, that go like, you know what, you know, we might be next. So we're talking about the weaponization of the dollar, the weaponization of trade, weaponization of US assets for some parts
Yeah.
of the world, right? Now, we're not going politics in a sense of right or wrong. It's just about its effect, right? So you're talking about really investors who just go like, no, well, we just cut 10, 15% or whatever. I can't really name a number. The same is probably true for some you know, big sovereign names around the world who just go like, no, well, we're not like killing our US investment. We just reduce it and then see what happens, right? And so the whole, you know, January to very early in the year where it started, dollar just started to grind lower up to about mid to late April when the whole Liberation Day really kicked off. We had this window of the selling bonds, right? US needs lower 10-year. Bessent, US Treasury Secretary Bessent, and Trump both said in autumn of last year, judge us on the 10-year yield, right? So in Trump 1.0, he said, judge me on stocks. This time, because stocks were a bit not so good, he said, oh, the stock price is still Biden, judge me on the 10-year yield. We're going to get debt down, we're going to get long yields down. But they were
Outgrow the
dropped
debt.
to about 380, then they rallied to 450. Well, they're still at 432, right? And we come to the sort of Fed problems with Trump in a minute. So reality is the sell America was really why the US or the Trump administration had to blink, right? Because the sell America trade gains traction in the dollar, which is maybe not their first priority, but in the bond market. The moment you start to talk about the US Treasury not being the safe haven of the world, you would de-anchor the entire world. You know, I'm not saying it would have happened if they would not have blinked, but we would have probably seen more pressure on US assets, especially on the bonds. Maybe 10-year would have gone to 5%. Who knows? We can't really answer that. So it was Bessent that I think was leaning into Trump and saying, listen, if this continues, we might have a problem. Right? Because at the end of the day, they have so big funding needs going forward. Having said that, at 1:30 today, we're going to hear the new funding schedule from the US Treasury. So there's so much to be funded that you just cannot have a bond crisis. So yes, Sell America came in. It was great to trade. So that started really already in January by selling the dollar, right? So that's why I say up to April it was easy in some ways, right?
So, but because I mean, I'm trying to bring, I think, trying to bring this back to something actionable. Because was your view sell America or sell, say, the USD, for example? Was that built on a combination of just seeing Trump policy kind of emerge, anticipating the consequences for the country, and then gradually you
Yeah.
developed a bearish USD bias? There was no event specifically
No,
that
there
said
were
it. You just
acceleration events. But the
yeah,
way, and this is like when you talk about the difference between being maybe a retail trader that just trades a day or whatever, or a sort of macro trader. So what we often do is we try to paint a picture of what is the next thing to happen, right? You know, more often than not, we hopefully right. So so the one picture for 2025 was quite clearly that Trump will probably upend a lot of things that will make people nervous. To what extent? No clue. How far will the dollar go? No clue. But there was a clear picture very early on in 2025 that short dollar is the trade to be. The dollar has to reprice. Then we also had a sort of fundamental side in a sense of, the Fed starts cutting rates, blah, blah. So it was not just all built around Trump. It was also around US yields coming off, blah, 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 blah. But a lot of
Yeah.
time. So I would say what you try to allude to is, yes, there were moments in the process where January, February, March, I wouldn't be able to recall every single sort of event. Acceleration
Yeah.
points. Where you go like, just when you kind of get unsure, now we moved like few percent, is that it or not, blah, blah, blah. Then you get given another reason why it's actually going to continue. And then suddenly this
Yeah.
whole, as the story unfolds, what are we? We are puzzlers. Are we doing puzzles? Are we taking pieces of puzzle and try to sort of create a picture? And the better puzzler you are, the sooner you actually recognize what the individual puzzle pieces will try to show at the end. And I think this sort of I talked about sell America before the market started to talk about sell America, because I saw it happen. Bonds under pressure, dollar under pressure, stocks under pressure. There is just one expression only: sell America. Then finally the media started to pick up on it. And I think that was like I mentioned before, this was the point where probably the administration started to realize what's happening. And so they sent Bessent out to kind of try, since that time we have the bad cop, good cop. We have Bessent, that sometimes is the good cop, and Trump is the bad cop, and depending on what's needed out there, this is the person they send out, right? And so Bessent definitely was an architect of slowing the story down a little bit. Well, the dollar has then bounced into mid-May. We then made a fresh low, but a more, normal low. And actually, it was just the dollar. The funny thing is, in this whole move of late, the sell America trade ended. Bond market normalized, stock market bounced. The only thing that stayed soft was the dollar. So we still saw shifts in the euro into the euro, and you saw that on some days between treasuries and bonds, that there's a clear asset allocation shift going on, where people just, for the sake of reducing some risk in the US and park it in Europe. Yeah, Europe is boring, but there are times when boring is great, right? And I think this is what we saw. And now we're probably at this sort of equilibrium where we could go either way, true speak.
Yeah, I think that because that euro transition you mentioned, and before I talk about that, when you talk about the moments, the acceleration moments, I remember when tariff announcements were bullish USD, and when tariff announcements, I can't remember which announcement it was, came out and the USD closed lower on the back of the tariff announcement. That's when, for me, that's big fucking acceleration movement. When the market now is not buying USD on it, then
Exactly.
sell the USD.
And this comes back down to what why you need the experience on markets, where experience just helps, right? Experience doesn't mean that you get everything right. But like you just mentioned, there are key moments in the process of a story where, sometimes it's about a reaction, right? So you hear something, it should do this. Well, if it doesn't do this, but does the opposite, that's a big signal. And this is bringing me to just, a little, side note about algos or AI. This is where I still believe to this day, and maybe one day I'm going to eat a very large humble pie about it. But this is why to this day, I still believe that for certain situations like the ones we faced this year, the human brain is better than an algo, because you can program the algo about events. Oh, if this happens, do this, and that's the easy part, right? But this year we've seen moments where, and you just exactly made the point of that, where the opposite happens. And when the opposite happens, that is the bigger information than if you would have tariffs and the dollar rally, you go like, yeah, okay, clear, right? And so the algo would buy dollars, go, yeah, it's always done that. And then the dollar sells off, right? That's the big news, right? So when stuff should happen and it doesn't happen, that's sometimes the bigger news, and this is where the algorithms start to struggle. And but this is what an experienced trader actually sees, and that's the difference, I think, in key moments. Now you can argue how many key moments a year you get. Yeah, maybe you don't get 50, right? I get that,
Yeah,
right?
yeah,
But
yeah,
definitely in this period of January to April, there were such moments more than once where if you kind of knew what should happen and what did happen, that you also knew that what happened was actually bad, and like what we said, the acceleration point.
yeah. I think like when you add in that element of kind of strategy in trading, because if something happens that is not expected, then there's people offside. And I find when those moments happen, you can get larger moves because someone's generally
Yeah,
trapped on the other
correct,
side of that trade.
correct.
But I guess so that's brought us right. We've got started the Trump regime. You were trading the kind of USD sell America narrative up until Liberation Day. But as you said it from Trump 1.0, you said you were kind of expecting moments like Liberation Day. So I guess how did you prepare for that kind of moment? Because that's definitely not the last. Maybe it's the last Liberation Day,
Yeah.
but it's not the last major volatility moment where we have in the calendar that we can prepare for. So I guess going into that event, how do you get ready for a Liberation Day?
To be honest, the I mean, one thing to say is Liberation Day is not something that everyone sits down and waits and switches on the TV and see what's happening. Right? It's an unfolding story that you could actually just argue it ended actually with Liberation Day, even though some of the boards Trump did show was just a bit of a laugh because they were actually at
Yeah.
some instances not true. So to be honest, the preparation is very simple. The preparation is what we expect versus what we get, right? So that means if we get the sort of tariffs that we give or take expected, we already price a lot of the event, right? So it's not that we just woke up to the story. So what you have to do in instances like that is you take what is priced, you take what the news is, and then you overlay. Now that creates your next view, which is it's priced or it's not priced, right? It's like when tonight we have the Fed. So what do we get? Do we get a dovish hold or do we get a neutral hold, or do we get a hawkish hold? Who knows, right? So it's the expectation. It's what you think is priced that then creates a next reaction. Now,
Mm.
if I'm not wrong, some countries were a bit of a surprise, especially Penguin Island, but because Penguin Island wasn't that important for the world, it didn't really matter, right? There are some countries like, I'm from Switzerland, the Swiss numbers were completely wrong, but so the tariffs were totally stupid, but the Switzerland is not important. So we focus on the big ones. So we had the escalation with China, we had the escalation with the rest, but that was pretty much price. So I think I couldn't remember if we bounced on the day or the few days later, or if we still sold off for a few days more. But that is sort of the event done, right? So when you prepare like for 3 or 4 months for the event, very often the event itself is the end or the possible end of a move. I did
Mm.
expect a bigger dollar squeeze a few weeks ago, which we started to see, and then we didn't see it. That surprised me a little bit. So I'm now a bit surprised that the dollar squeeze happens now, what I expected a few weeks ago. So right now it's very difficult. And I'll be honest with you, in the very short term right now, I'm struggling with a few things because there's 2, 3 different conclusions that you could take for this move, but we don't yet know which of it is it, or is it just that July the month end fix, the thin markets due to summer holidays. But we're in this vacuum right now where for the euro, it's come since the trade deal has come off 2.5 big figures. Um, is it buy the rumor, sell the fact? Do people think the deal was bad for Europe, or is it just the fact that the whole world is short dollars, and finally there's nothing more to drum about, and we squeeze, right? So,
Yeah.
having said that, I still think the dollar will struggle just from the outlook of the fiscal side going forward, right? Not to say that other parts of the world, we all have a bit of a debt problem, and probably the biggest one is in the UK. Don't even get me started on the UK. But
Yeah, we have
so
to do a different episode on the
yeah,
UK, I think.
that's probably about a 3 hour session. Uh, or you can do it in 5 minutes, right? Yeah, because there's just one headline is useless, but that's a different story. So I think what you mean is so I think the key for people that are less experienced is, and this is why we see people that are less experienced struggling at times, because they only start to get active when the news hits, not to understand that actually the news has started already quite some time ago, and we already got a move for what we started to price in for the event. So the event itself is actually not the start to trade, it could be the end to trade, meaning, liberation day comes in, like I said, you overlay expectation versus reality, see if there is still something that needs to be priced in because it was a bit, worse than expected, or actually if it's more or less give or take, where it was, and then things can start to stabilize, at least in a way of monitoring what's going to happen from here on end, right? And like I
Yeah.
said, the dollar had a bounce at the time, and then gone weaker again. While I think, if I think equities, just quickly bring up an equity chart, but I think equities, which I only watch usually with one eye, unless they sell off, then I watch with two
Mm.
eyes. Um,
Yeah.
uh,
Yeah, for the broader risk story, I guess you would
Yes,
look at
to
you
be
would
honest,
check.
I
Yeah.
was going into summer thinking, and this would have been depending on what happens on the tariffs, is if the deadline arrives August 1st and we don't have a solution, and Europe is ending up with 30% tariffs and Japan with 25% tariffs, I would have switched on selling equities and selling risk, because then we would have gotten part two of what we got early in the year, which is risk of like bearish global growth, bearish story with the escalation of a trade war, Europe prepared retaliation on about 80 or 90 billion dollars worth of US goods. So you would have this tit for tat situation where, the only thing that suffers is the real economy. So we didn't get that. Now, I just quickly brought my equity chart up. So more or less, Liberation Day was the low in equities, give or take. I wouldn't be able to say that on the day. I can't remember exactly, but you know, the
Yeah.
the 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 S&P was, 4,800 and is now 6,400. So the equity market just made everything back and more. Uh, and so this is the next question now, and this is where I am now heading into autumn. Is uh, Is the US exceptionalism coming back, with Trump being seen as the winner of all the trades, the tariff stuff, the kind of investment, if they really happen, into the US, the pro business thing that we saw also in Trump 1.0? Is this creating this sort of second wave on the US economy, which in some ways makes me laugh when he at the same time expects the Fed to cut rates aggressively, when at the same time he
Mm.
talks about the US economy is like on fire. So you can't have it both ways, as we know. So I think for that we are pretty much kind of, this is where the experts are debating now, right? At what inflection point are we? And I think, yeah, we can have our view, but I don't think there's a clear answer right now if what we've seen now, with all these deals coming in, that this is the end of this kind of worry around the US and the dollar and the America, and that we now shift gear back to exceptionalism, or B, what we talked about like in the early part of our session, whether that political overhang, the worries around the political agenda from Trump, is still worrying businesses in regards to that Trump can change the goalposts very quickly, right? So that is yet to see. So hopefully he is now all happy with himself and taps himself on the shoulders and quiets down a little bit, even though that is maybe asked too much from Trump to quiet down. But you know what I mean, right? So
Yeah, I think
if the Fed will not cut rates tonight, so it's going to have another go at Powell tonight. But I think we also sorted that out. That was probably also coming into this episode of U.S. markets being sold. Is like this fight between the White House and the Federal Reserve, which is not very helpful because risking central bank independence is a big thing. And
it's a big one. Yeah,
as I did put on X at the time, showing some dollar Turkey charts, you can actually just look at Turkey, what happens when a central bank loses independence, right? And this is also coming back to the good cop situation of Bessent. I think Bessent clearly will have told Trump what's going to happen to markets if he were to plan to fire Powell. And this is when Taco blinked again. So he sort of calmed down because, okay, his term is May 2026. You know, Fed fund rate is not deciding factor on what's going to happen to the U.S. economy right now. It's a long end, and if
yeah,
the Fed would have lost independence, the long end would have yields would have just exploded, right? So, and this is
yeah.
intellect that drives me mad. And I did send Trump the odd True Social post when he started to annoy me so much about the crap he was talking about on the Fed and
Oh,
US yields and blah, blah, blah. It just hurts my brain. The last thing I say on this topic is where I was wrong, even though it didn't really matter trading wise. I felt when I heard Bessent was elected as the US Treasury Secretary, I was quite happy, and the bond market responded at the time quite well. Back end of last year, bonds rallied, yields came off, because same as I felt that we had an adult in the room with Bessent, an experienced former hedge fund trader who kind of knows what this is all about. And the disappointment is now coming where Besson has started to resort to the same rubbish that Trump is talking about at times, right?
yeah,
Meaning
yeah, yeah,
he kind of realized real life meets politics, and you either on the good side of Trump or you're on the bad side of Trump. And so best probably is to kind of just go along with it. So some of the comments from Besson in the last many weeks were a little bit disappointing, to say the least,
yeah.
because he just now talks the same stuff that Trump talks, which is not very helpful.
Yeah, bit of a touch of MAGA on his tone. I think the last couple of months. Yeah,
Yeah, there's a
but
new topic brewing, which we don't have to talk about because it's obviously, just maybe raise the point, which is obviously Epstein, right?
oh
This
yes,
is
yeah.
not
So
going around in our media too much.
I don't want to. I don't want to get cancelled here, Beat, for mentioning Epstein. No, I'm joking.
Exactly, exactly. Now, let me just say
Yeah,
this, and I'm not talking about details of it because I don't know. Um, it's just a bigger problem for Trump that people make out, right? So his base, the market base, is quite disappointed because they believe Trump that he is not the deep state, and if that stuff that gets buried, whether there are files or not, what do I know? Uh, but if they kind of the way it looks right now is as if the sort of deep state moved on to Trump. And this is what the base, the MAGA base, is thinking about the topic. So the only reason I bring it up
yeah,
is no surprise that Trump was hacking on Powell. And maybe he needs another victim to hack on because he needs that distraction from a domestic issue that could actually be a real problem for him. What happens?
hmm,
I don't know. Whatever happened, I don't know. Guilty? No, I don't care. I don't know, right? So I would never comment it. The
yeah,
only reason I mention it, I want to mention it in the context of the agenda for Trump being economics or domestic politics. Uh, So there is an issue out there hanging in the air that is not solved yet, that could actually come and bite him in the backside, domestic politics rather than international trade.
Mm. Yeah, I think like when we saw the whole escalation in Iran, when we saw the big beautiful bill, all things he campaigned for kind of U-turning, right? So people that and so the Epstein thing is just
Yeah,
another list of things where he was pushing in his campaign, but now they seem things aren't quite as they seemed, you know.
yeah,
Um, but yeah, that and I want to go back to the risk story, but I think let's focus on we've got a Q&A, one time for one question,
yeah.
where and I know Bitcoin and cryptocurrency is something near to your heart, right? And I see your debates on LinkedIn, right?
I've given
But we
up a
had
bit,
a
haven't I?
question. Yeah. Yeah, to be fair, the person that asked the question, I texted him and he said, yeah, he hasn't really done too much in the last 11
Yeah,
months, but he did
yeah.
remember the previous time. But his question was, what would it take for you to change your view on Bitcoin as an asset class?
Nothing. The problem is, and to be honest, I think the key issue is Bitcoin is, and the sort of pros and cons and the fights that are out there, is that the Bitcoin community keeps on arguing about the price. And yes, the price, yeah, you can argue about the price in the tulip crisis. And I know we shouldn't mention tulip and Bitcoin in one sentence because that upsets all the Bitcoiners. Uh, but let's just say price is not really the topic. One thing, and I think the FT actually did quote me on this about 2 years ago, and this is the fun part of Bitcoin. So you had these people, the hardcore Bitcoiners a few years ago, that just thought about creating this parallel universe, right, which is delinked from anything that the real world is talking about. And so that didn't go that well overall. And then suddenly, the institutional side started to have to invest in Bitcoin. Let's put it in perspective. People take people like BlackRock and other people as examples. Right? First of all, BlackRock is not putting all money in there, but let's leave that aside. If every pension fund at least goes like, what, just in case, right? I'm gonna do 0.5% in Bitcoin, right? Now, in real money terms of a large asset manager or a large pension fund, that's quite a sum that has to be bought in Bitcoin. And so the Bitcoin community goes, oh yeah, the institutions are in. Come on, they just hedge their bets. So in a sense that if Bitcoin is indeed the next big story, I can't be seen to have nothing. But in relation of their overall investment, it's peanuts because they can afford to lose, even if they use 1 or 2% of their AUM to buy Bitcoin, they can risk to lose it because it doesn't matter for the whole, like in comparison of the AUM. Now, I had an interview with the FT, and I said to that journalist at the time, I said, listen, this is now just another risk on, risk off instrument. It's not a risk hedge, it's not an inflation hedge, it's all really bullshit, sorry. It's so the fact that we invited the institutional guys, actually the true Bitcoiners should be upset about that because we just turned Bitcoin into another fiat. Sorry. And so if you look at the value of Bitcoin and say, oh yeah, it's like what, 117,000, so that's why it's a success. Maybe, maybe not, right? Because what is the real value at the end of the day? We can, we had an inflation problem after COVID, which is at some time less to do with central banks. Maybe they hiked a bit too late, but we just had a crisis we never seen before. We stopped an economy, and then we had end of lockdown, and suddenly everyone wanted to spend money because they got paid to sit at home, and you have a bottleneck of the supply side, right? So you have of course, prices explode. And so since then, you only see all these fiat stories, blah, blah, blah. Yeah, I'm not saying fiat is perfect. Now, Bitcoin can't replace, Bitcoin is not money, right? So we have to define what Bitcoin will be or what it's meant to be. So maybe there's other stuff in crypto. Digital assets obviously is a story. Stablecoin is a story. But one thing is I just can't see is, and maybe that's the problem because I'm old, and been in that system for so long, is end of the day, you can study 5,000 years of reserve currency, right? And I've done that. Not study as in study, but my first ever client back in Switzerland actually had a money museum in Zurich. That museum still exists. And that goes back to 5000 BC, right? And it explains that, the reserve currency is always the strongest country, the strongest economy with the strongest army in the world. Fact, right? And so a currency has always been backed by a system, by a country, by its military. Whether you want, so there's two different topics here: reserve currency or the value, the external value of the dollar, which are two different topics. Now you have Bitcoin. Now those people that were always so bearish for the world and the collapse of fiat, you better think about what you wish for, because if fiat collapses, forget your Bitcoin on your hard drive, because you're not going to find a bloody plug to to charge up your mobile phone or your PC. So just if you want to go extreme, that's not a reason either, right? So the store of value, I question. Then also, like some of the fights he was alluding to that I had in the last few years, is that people talk about Bitcoin, and all these people that write all these posts all the time, they don't even own one coin. At $117,000, how many people really own a coin? So I actually predict, well, it's not a prediction, it's just a view. The limitation of how many Bitcoins there will be is the downfall, or will be the downfall of Bitcoin in the future, right?
Oh, wow.
Bitcoin is actually a deflationary instrument. You see all these charts about, if you look at house price in Bitcoin, house prices went down. This reminds me of Japan. Why did Japan have a deflation problem for decades? That the deflation problem because prices come off. If prices come off, people don't buy stuff. Why? Because it's not worth it. It's going to be cheaper tomorrow. That's why deflation is worse than actually inflation. So in my view, and I will now have all the experts on Bitcoin, which I have to say here as a footnote, I'm not an expert in Bitcoin per se, right? That's why I have a lot of people will be shouting at the screen now. It's a deflationary instrument, right? So how all these people that argue how much better the world war is Bitcoin, I say another word to them. I say, okay, Bitcoin is interesting because you have fiat, so you have a price to look at. How many of these people would be interested in Bitcoin if it be Bitcoin? No fiat. It's just one Bitcoin is one Bitcoin, because that is basically what it would be if it were to replace our monetary system, which I see no chance at all of ever happening. Coexistence, maybe, possibly. Real existence, probably not. There'd be other products if we talk digital. Don't get me going on CBDC, because we have to avoid that one. Otherwise, we lose the last part of our freedom. So it's kind of bizarre that all these Bitcoiners are trusting their online footprint so much with that decentralization story and blah, 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 blah. But at the same time, the only way to actually be off the radar in a parallel universe, if you buy a shed in the woods and you go off grid. That's really the only way, right? So trust me when I say I will never, and I know we should use the word never very carefully, and I try not to use it very often. Actually, rarely ever. But this time I do. I will never be a Bitcoiner, ever, right? I have the advantage of being old, so maybe I get through the next 20 years without having to adopt it, and I don't think I have to. I think people start to realize that maybe money or cash should remain in society for all different reasons. There's already the discussion, if you have CBDC, what do like all these sort of charity shops do? There's a lot of knock-on issues that you have in the world. if you were not to have cash around. But we are cashless right now because we pay with a bloody credit card, of course. And COVID was just another way for many businesses to remove cash, right? Which, if I were people, I would start to use cash a little bit, because once it's gone, it's gone. And you don't want to be in a world where you have no cash left. This is sort of my final word on crypto. You don't want to go all digital here, right? But answer question, I will never adopt Bitcoin. Even if it goes to $1 million, like I said, the price is not relevant to me, because how many Bitcoins could you possibly earn? If I trade FX with a leverage of X, I can make more money. Yeah, the percentage gain in Bitcoin look impressive. But if you look at the leverage stuff we do in FX, I make the same amount of money or more, but in a slight more predictable way. If it's just about money, right? And to be honest, let's say this is maybe my final word on Bitcoin. It's a great punting instrument. Don't get me wrong. The people that made a lot of money punting it, chapeau, brilliant, right? But let's not get too stressed out about it, because about 80 or 90% of people that are in crypto are there to make money. And to make money, you need fiat, because that's the only way how you, at the end, make the money, right? So I think there's a few probably very hardcore Bitcoiner, and maybe they're there for the right reason. Maybe the system is indeed whatever it is. I'm just not buying it, and I don't think anyone can ever convert me. Famous last.
Okay. All right. So I mean, generally you see it as a risk. It's a risk instrument as opposed to something that's a viable currency. You'll never own it.
To be honest, it's not a currency, because the problem starts where people want to hold it. There are all these jokes going around where in the early stage of Bitcoin, someone bought a bloody pizza with it, right? And if he wouldn't have bought a pizza with it, he would now be worth $3 million, right? So, so that's why no one is going to spend. So Bitcoin is not the currency, right? Is it an asset? Is it an investment? Who knows, right? But it's not a currency, right? Because it's not designed as one. Okay, then the Bitcoiners say, oh yeah, you can do fractional and all this stuff. Yeah, fine. Doesn't make it worth more. You can now introduce the dollar is not 100 cents but 1,000 cents. You can do the same if you want, right? So that's not an argument for me, and so that's why I'm just not for me. Sorry.
Okay. And I worked on CBDCs for the Fed when I worked there, so we won't get into that.
Yeah, no, better not. Otherwise, my language, my tone will change, and the words will become ruder.
You never do the podcast again. Yeah, but I mean, coming back to right now, the core topic was, right, how do we navigate Trump going forward? So in this taco narrative, you're reducing vol, you're reducing your time frame, and you're just, I guess, trading levels, technical levels, like you've always done previously.
Correct.
Managing your risk so that you can survive another year and nothing.
Correct.
Yeah. Okay.
And like I said, maybe now when this sort of tariff story is kind of come to fruition now into August, maybe that sort of ship sailed for a while, and we can go back to data and macro, and so then my duration will start to increase again. So I think the word is flexibility. You have to adjust. So the market will never adjust to you. You have to adjust to the market. That is the key story, right? You can drum around the bush and you want the market to do this or that. The market doesn't care, right? So that means like you have to try to find the right strategy for the way the market is. And I just think the market was too flip-floppy of late to have like the biggest view on the planet. So you have to be reactive and a bit more short-term and just be able to control your risk on press of a button if need be.
Brilliant way to finish. That flexibility, very important. Beat, pleasure. Lovely to see you. Lovely to talk to you.
Thanks very much indeed for having me, Colin. It was really nice.
Hey guys, If you're still struggling with your trading, I've made a quick video on how to create a sustainable and scalable trading process. Watch it here.